I'm here with Neeraj Seth, Head of Asian Corporate Credit for Blackrock, and with Rajeev Mello, Head of Asian Investment Management for Western Asset Management. Good afternoon, both of you.
Good afternoon.
We are here because both of you will be taking part at the Fixed Income Trading and Investment Conference, which is happening in August. But we'd like to know what the current global economic landscape and its impact on the Asian fixed income market is at the moment.
Well, essentially when you look at the global environment right now, if one breaks it down in the main regions, the U.S. and in our opinion is in the phases of recovery. Some of the problems of the crises are slowly wearing off. We continue to see growth improving in the U.S. And the job situation improving as well. And we think that the Fed has also realized that, and we heard from the U.S. Federal Reserve that they're not going to continue with the quantitative easing policy, but then at the end of June. So the general situation is better, with a few risks on the horizon, with the risk of some fiscal tightening coming in, which could be a worry, as politicians and policymakers want to reduce what is an oversized deficit, but which may just be coming at a time, which it might be just a bit too early for the economy. So a bit of a risk that you have a contraction in the demand from the government. The other risk is one that we talk about a lot, is obviously higher oil prices. Oil prices act as a tax on growth, and we think that that might also slow down growth at the margin as well. So those are two things which are a bit worrying. When you add that to the end of the quantitative easing program at the end of June, it might be a little period of uncertainty going forward, but we don't think it's going to derail the recovery in growth in the U.S. In Europe, you have different situation, with Germany doing very well, growing strongly on the back of exports, and a real recovery in demand for German products. You also have, on the other hand, the famous peripheral countries, which are very weak, but which account for a very small part of Europe. But France is also growing quite slowly. So in that environment, and of course Japan's recovering, we do expect that the Fed will be largely on hold. We think that it was quite clear from the Ben Bernanke's press conference and the FOMC statement that the Fed will be very gradual at removing any of its very accommodative monetary policy, and the first time they could really raise interest rates will be somewhere in the beginning of 2012. The ECB, we think they'll half-heartedly increase interest rates. If they were managing monetary policy for Germany, they would probably need to increase rates far more. But they are managing policy for overall Europe, and every now and then we all hear headlines about peripheral Europe being a problem. And that'll probably keep the ECB from hiking too much. So in that environment, what that means for Asia really is still very benign, because with the Fed largely on hold and the ECB tightening very moderately, I continue to think that Asian currencies will do well. They've done very well year to date on the last 12 months, but I think that they'll continue to perform very well. They are buoyed by still a strong market for Asian exports. We see export numbers doing very well, despite currencies having appreciated. They are buoyed also by an increasing interest rate differential as Asian central banks have tightened policy. So just to wrap up, I think that on the general global environment's impact in Asia will continue to be supportive and positive, mainly through the currency route.
And Neeraj, can you give us your thoughts on that?
Sure, no, I would in fact agree to what Rajeev said. The only thing I would add is, in fact, in addition to obviously the current, what I would call a very benign situation in Asia, is the fact that some of the things that have changed in Asia is the ownership of, obviously, the foreign ownership of the Asian fixed income market, both on the local currency and the credit side. So that obviously has been part of it. I would call is a fundamental shift, because Asia was underrepresented in the global portfolios. So part of it, that fundamental shift makes sense, but there's also a little bit of hot money that Asia has attracted, right? So that always poses some risk in the short term. Now, coupling that with the end of QE2 in June, I think the least it does is it does create certain level of uncertainty in the market, which can lead to a rise in the volatility in the short term. Now, is that going to be causing a lot of like downside from here for the Asian fixed income? I'm not sure if that will be the case, but it can, as I said, increase volatility and maybe some potential move in the market, which could be, in my view, from a longer term standpoint, a buying opportunity in some of these markets.